Hi, this is RN Bhaskar from Bhaskar Ki Business Baatein. And this time we have with us once again, and we're lucky to have him, Manish Chokhani, the legend in the investment community, one of the big financial geniuses that India has produced, and who I always look up to for information, for advice, and for a perspective that we sometimes lose. And this time we look at investment areas. When the world is in a turmoil, when countries keep bouncing up and down, at that time money becomes very skittish. It wants to find a good place to park in. At that time, it's important to know which areas are the best investment areas. And for that, as always, I go to Manish for advice. Manish, thank you for being with us.
You're being over generous with your description, but I'll
No.
live up to 5% of that.
But thank you, Manish. But it's wonderful having you here. And when you look at the world now, old investment strategies may not work. You have to think afresh and look at what are the possible investment areas for the next 20, 30 years. Let's start.
So I think when the world became unipolar, with the US taking control of the world, you had an unprecedented era of globalization.
Yes.
And a consistent decline in interest rates. And that gave a fillip to equities as an asset class and a rise of PE multiples.
Yes.
Right? But if you look back across history, number one, most currencies which are printed have lost in the last 100 years 99% of their value against gold, which is being
is true. Yes.
Right? That's like, just park that thought and keep that as
and
an
this
aside.
chart which we are going to show
Right.
is perhaps indicative of how they lost value.
Right. So it's been the go-to place for the world for centuries, and it's not likely to change for decades to come, because again we are going to go through a tumultuous change in the coming decades as the world moves away from a unipolar world to a multilateral world. The second takeaway you have is that till the world was pegged to the gold standard, and then the US broke it in the 70s, you created bubbles in every decade where that excess money found the best asset class of that decade to go to.
Yes.
So if I draw you back to the 70s, we first had the rise of the Nifty 50 in the US. If you remember Disney and Polaroid and Kodak and all these, those stocks went up 10 times in that decade. As you approach the end of the decade, it moved to commodities, and oil, if you remember, peaked in 1980, and then the famous Hunt brothers who did the short squeeze on silver.
Yes.
Gold, and it peaked in 1980, and then gold went into a bear market for the next 20 years because the peak was so high. Towards the end of the 1980s, again, the money swept and went into emerging markets, which then was Japan and Taiwan.
Yes.
So you see, you go from growth to hard assets, and I'll repeat that. So it came in the late 80s to Japan and Taiwan, which were up 10 to 12 times in that period. Again, you switch and you come in the 1990s, it went to NASDAQ and the TMT bubble, which you'll remember, of 2000, 2001, that peak. And even the NASDAQ never crossed its high till 2013. So it was a 13-year bear market after the peak it made. The 2000 to 2010 period became the era of what we call BRICS, where it was supposed to center around India, China, Brazil, and Russia. And indeed, we all did very well. And it's really China which broke out from there. But the peak that China made then, they haven't produced any returns since then for the last 15, 16 years. It's been the worst performing equity market in the world.
Okay.
And in the last decade, the money then went back into US technology and FANGs. And you now see the rise of the Magnificent Seven, which has been extended with the excess money which got printed during the COVID era. It started in the global financial crisis. And then because they discovered this magic wand, they continued printing in COVID as well. And that's extended that bull market over there. But US today is 65% of global market cap.
Yes.
It's 20-25% of world GDP. So it can't be 3 times of the world. Plus, it's sucking in almost 40% of global savings into the US.
Okay.
So this is not sustainable. So this is going to change. It will be devastating what's going to happen over there. And while we are all focused on 3-4 companies, which no doubt are exceptional companies, But they will be attacked.
And which are the 3-4 companies that you're killing?
No, the best ones, if you know, the Amazons and the Nvidias and the Apples and the Microsofts of the world, Teslas
Correct.
and all of the world. These are world-beating companies. But already you see chinks in the armor for a number of them. So we'll hold that debate for a subsequent discussion. So you have 2-3 takeaways. That number one, if there are going to be 1 billion people rising in China and they control manufacturing and so on, you want to know what they need. So energy remains a scarce resource. When money becomes funny, as in it's being printed every 3 or 4 months, people will want stability. And that goes back to precious metals like gold and silver and so on. Energy, I think, with this whole move back towards renewables and the comeback of nuclear, because even if you have to power these AI data centers,
the
amount of power that they need,
yes,
the power that they need will take up all the US power supply. So you basically need to double the US grid. You need to double the grid in China, and of course India needs to quintuple its grid.
Yes.
For basic needs plus whatever else is coming.
Very true.
And it can only be done by something like nuclear and solar, which is there in abundance. Because how much will you drill and how much can you take out, carbon from the earth? So gold, silver, uranium, or copper, all these which go into the transmission lines and all, they will be exceptionally strong, I would think, over the next decade.
So in a way, commodities, but metal commodities.
So, but not. It can't be, if you generalize to commodities, you may go and buy the wrong one, which is iron ore, for example.
Iron ore, yes, right? Steel.
Now, there's 1 billion tons of steel in China, which they don't need anymore because they build their cities, they build their infrastructure, and need to dump their steel. So, iron ore is not particularly a commodity of interest. But like I said, if you are on uranium, if you're on gold, you're on silver, that's of great interest.
Precious metals, yes.
Precious. And like you said, the critical minerals, which will go into usage of EVs and solar panels and so on, rare earths, which is more difficult for people to play. You can buy some ETFs, but it's not going to become a $1 trillion asset, for example, which is, you need assets which can absorb large amounts of money,
yes.
To give you that kind of rise. The other thing which has happened interestingly, and coming off both Donald Trump and Elon Musk, they've given legitimacy to cryptocurrency.
Yes.
And it's hard for people like us who are over 50 to buy crypto, which is created by a computer. It's the equivalent of a printing press given to a central bank, except here it's controlled. And it's only the program which allows you to then mine a limited quantity. So it's become an asset class which, a bit like someone says, if you believe in Jesus Christ and God, Christianity becomes the most prevalent religion in the world. So if there are enough people who believe in cryptocurrency, yes, it becomes the new religion of the world.
In fact, as an aside, cryptocurrency has suddenly become very sexy because every politician wants cryptocurrency to transfer funds.
Yeah. So, well, I mean, there are various categories of people, not just politicians, who do that. Like they say the whole black economy, all these terrorist funding and so on, because there's no trace over there.
Yes.
And even the central banks have gone into the act by saying we'll have central bank digital currency. And it can still move anonymously.
Yes.
Although there's a trail somewhere in the system. But so crypto itself has become a large asset class of its own. I can't see myself participating, but I can't deny it is large and it's going to become larger. And the fact that Musk has chosen to call his new department, the Department of Government Efficiency, after his favorite currency, the Doge coin, which is an alternative to the Bitcoin, tells you what these chaps are up to. So these two big categories definitely become new avenues for people who are in currency and bond markets to go in. Okay. I think interest rates are going to rise in a secular manner because of inflation, which is unleashed in the West. So bonds are going to be crushed, and therefore hard assets come back. So if you're owning land in proper places, I think you do well. If you own, again, back to technologies, because the world in the next 5 years will dramatically change. With the rate of change, for example, in artificial intelligence, where today it's at the rate of a high schooler, 2 years from now it will be at the level of a PhD, and another 2 years from then it will be equal to all the PhDs of the world put together. So in 4 years, you have a fundamental shift in mankind of the type when we went from the agricultural age to the industrial age, and all the artisans were out of work. In the foreseeable 5 years, white collar people who are sitting processing data and converting it into decisions can completely get obliterated. Also on medtech, which with the advent of biology-based CRISPR and biotech and so on, it replaces chemistry-based pharmaceuticals. So you're seeing the tumbling of the multiples of the Western innovators, the J&Js and the Mercks and the Bristol Myers are all trading at single digit or low double digit multiples, because people have realized that what has been released with both biotech and AI after they mapped the genome, and then CRISPR-Cas9 technology came out, where you can go in and basically do a sniper rifle hit into the disease in your body instead of the old nuclear bomb, which chemotherapy went and blasted the whole area.
You just take the chromosome, you just take the DNA.
You can remove that and put that back in. And then what AlphaMind did with Google, that all the scientists in the world put together had processed about 190,000 protein strands. And these chaps came and released 200 million in one go. And now when you put the sheer force of AI on that to start creating disease-solving proteins, I think medical science will be transformed again in 5 years. I've met people in the US who say, just don't do anything stupid till 2030. And the field of epigenetics, which is the next wave coming over here, says your body is born with whatever 1 billion, genes. Then how come you go from being a child to a kid to a young man to an old man to death when the genes are the same? It's because things are being switched on and switched off at different points. And we now know, or we are working towards how to do that. And therefore, if you choose to be of the age of 30 forever, in the next 5 to 10 years, we can deliver that to you. The first mass of this, for example, these GLP drugs which have come, Ozempic and Wegovy and so on, are actually coming from that sort of strand of science, that you can switch on and switch off certain things, receptors in your body, to not give you that hunger pang or to keep your weight down or keep your skin glowing and so on. All these are coming. So these will be transformational industries of the future. And the question though I have is, when the world breaks down from being a global equity world where money flows freely, and we start now creating hurdles and borders, will we still pay multiples of the kind we are today? Because a lot of our valuation is on terminal values, which is predicated on a lot of certainty. But in an uncertain world, normally you would expect lower multiples.
Yes, so your P's, which are very, very high.
We are currently on the opposite end of the spectrum, because rates are low, money is easy, and multiples are high. So there is some change which has to happen here. So all you can do is, like I said, you buy the best innovator in terms of technology companies or brands which will never change, or you have to buy hard assets.
Yes.
So that's the sort of lay of the land, and that's how I would construct my portfolio. From an Indian perspective, even more importantly, because our money is trapped here effectively, we can't really remit more than what they allow in LRS. If we are not allowed to invest globally and harness those technologies ourselves, both as companies as well as investors, because if, let's say, an investor in India had bought $10 million worth of NVIDIA, it would have been worth $1 billion by now.
Correct.
And that would have been money which could have flown back into India.
Correct.
Rather than waiting for a worker to remit money back to India, you could have had investment flows coming back.
Correct.
So things like this also, I would hope and pray that we have a change in the Indian regime.
So that we can send money out and bring that in.
So not just for taking out, but also for investing in these technologies, learning from them, bringing them back to India, or indeed creating them over here and taking them global. We are a bit very, very sort of in our urge to protect ourselves.
We have created a lion casket and blocked everyone.
It's like they very famously said, when the New York guys put rent control, it stopped supply of new apartments in New York. So that's what we've ended up doing in India as well, because of our currency.
So effectively what you're saying is that precious metals, select minerals,
energy for sure,
and technology. And in technology again, biochemistry.
Right.
Biomedical sciences.
And everything around AI, robotics, AI. So you think of your body, right? Your eyes are getting multiplied with the use of AR and VR. Your body is being multiplied by the use of biology. Energy is your heart. AI is your brain. And robotics is how you move. So all the 5 things, we're going to be effectively made into superhumans in the next 10 years. And the technology which are there, you laugh, but if you think of it, 100 years ago, if you could not afford glasses or the technology wasn't there, you would have been blind at 40.
Yes.
And you can't move. Same way, if penicillin hadn't been invented, we would have died of infection. So the rate of change, all I'm saying over there is
accelerating.
It's gone completely exponential.
So where does it place old old world stocks and old world enterprises, where does that place them?
You'll make your cash flows, and how people have demonstrated in the US as well as now in China that they do buyback. So when you don't get a multiple, you buy back. So your earnings per share can still compound, even though the market's not giving you that multiple. If you can buy back at 3, 4, 5 year payback, it's still very, very accretive to the owners of those businesses. So look, everyone who fulfills an economic need is going to get rewarded.
It's going to be there, yes.
The question is, as an investor, our job is to take asymmetrical bets. So if I say technology is very good, but the whole world recognizes it and it's already paying a 40, 50 multiple for it, you don't make money even though the business succeeds.
Correct.
And we've seen that play time and time again.
So the future will be looking for low multiples in this high growth area.
Not low multiples, where the perception and reality are not matched. So like when you said old economy gets thrown out, it becomes a 2p stock or a 3p stock. You can still make money over there.
Yes.
So opportunities are there for the agile. And like it was said in the past, it's not the most powerful creatures which survive, it's the most agile.
Okay. One more question here. While all these technologies and all these metals are there are some basic things that every country needs.
Right.
Like ports.
Yes.
Like airports, like roadways.
Right.
I don't think we're going to dispense with these.
Right.
So would they be good investment areas?
So again, like I said, everything is a function of what is your entry price and what are the terms of trade. So for example, let's take the Indian telecom sector as an example. That if the terms of trade were that the government will extort all the money out by way of license fees, you can be in telecom and you can end up in Idea Vodafone, and you don't make any money.
Yes, absolutely.
Right? Or the rules of the game change. Like for example, Mr. Musk now wants to bring Starlink to India, and the rules of the game may
change if he comes.
May or may not. Well, not him, but even Bharti is trying to play that game.
Bharti's got one web there, and he wants to play the same game.
So same way in airports, if you, instead of creating 30 airports, you put 120 airports, and you have 3 airports in the same city, and then they're fighting and jostling for traffic, you don't make money. Like the Eurotunnel, very famously, between France and the UK, is a monopoly, and it's gone bankrupt. Because the terms of trade
in spite of being bankrupt, yes. In spite of being monopoly, yes.
So it again, it depends. So I don't want to give an omnibus statement on infrastructure. They tend also to be regulated because they are utility type assets.
Yes.
Otherwise, you would think, for example, a power plant in a city should be making money hand over fist, but tariffs get regulated. So same thing applies to ports, airports. It may not happen today in India, but that time will come.
Okay. So in other words, be more careful. These are broad guidelines, the sectors that are going to make money, but ultimately it depends upon the ability to generate wealth for you.
Yeah, absolutely.
The whole principle remains same.
Yeah. The owner is going to make money, but you have to decide what price you can become his partner.
Okay. Okay, good show. Thank you. Thank you, Manish. We will have one more podcast with you whenever possible.
Thank you.
And that is going to be on India. What does India do? But thank you very much for being here.
Thanks for having me.
Thanks.